What's up guys, and welcome to Wall Street Millennial. In this video, we're going to go over some of the greatest trades on the Wallstreetbets forum of the past week so we can learn from other traders' experiences. These videos are made possible by our channel members, who get access to all of our non-time sensitive videos one day in advance. If you want to become a channel member, press the join button, and if not, you can still support the channel by subscribing and smashing the like button for the YouTube algorithm. Without further ado, let's get into the video. First, we have user Shroomton Strether, whose retirement plans have been set back significantly as he lost almost 80% of his Roth IRA from peak to trough. In early February, his account peaked at $1.65 million, but has since precipitously declined, leaving him with $384,000 today. He started off in 2020 with a little under $300,000 in his account, but made massive tendies playing calls with expiries ranging from 1 to 3 months. His first big win came in July when he loaded up on Tesla calls, which brought his account up to $500,000. He gave up some of those gains, but in December, he took his portfolio to new heights with Virgin Galactic. Feeling confident after these two wins, he decided to go all in and YOLO his entire portfolio into calls on BlackBerry and Stable Road Acquisition Corp, a SPAC merging with satellite company Momentus Space. These two positions were his biggest winners yet and skyrocketed his portfolio to more than $1.65 million. He had a retirement goal of $1.75 million, at which point he would take his profits and stop doing YOLOs. He was only $100,000 away from his target and figured he should just diamond hands his positions until they appreciate a little bit more and he can reach his goal. Unfortunately, starting in early February, the SPAC bubble burst and Virgin Galactic tanked 44%, and Stable Road Acquisition Corp tanked 45%. Because he owned calls on these names, his portfolio decreased even more, falling 80% to its current level of less than $400,000. This puts him more than $1 million away from his retirement target. The comments section mostly criticizes the OP for being too greedy and failing to have a realistic exit plan. In December, he had a big spike but lost most of those gains by failing to take profits. In January, when he had his second spike, he should have learned that what goes up must come down. But instead, he made the same mistake for a second time and watched his unrealized gains evaporate.
It fooled me, we can't get fooled again.
On the bright side, he still has more than $300,000, which is more than most people have saved up for retirement. He'll probably still be able to retire comfortably, but may not realize his dream of retiring in a Lamborghini. Next up, we have user Elgin809 with a massive gain by having diamond hands on GM. He says he has a price target of $120 a share, which would mean a doubling of the stock price as it stands today. GM has had a major run-up in the past 6 months, going from the high 20s to pushing up on $60 a share. The OP holds 25 contracts of $40 strike calls, expiring in January of next year. He bought them when they were still out of the money for 60 cents each, or a total cost basis of about $1,600. They are now worth $21.70 each, or $54,000 total, for a 3,500% gain. That's a gain worth more than $50,000, or roughly the price of a new Porsche convertible. GM, along with fellow legacy automakers Ford and VW, has been doing very well in the past few weeks on optimism for their prospects in the electric vehicle space. Jim Cramer on Mad Money said that holding GM or Ford can allow you to have exposure to strong EV makers without the risk of being long a highly valued Tesla or EV SPAC. Luckily for the OP, he bought these calls many months ago and they are now comfortably in the money with a $20 or 33% margin of safety. Even though it's not a GameStop play, a gain of this magnitude is always impressive. Congratulations on your gain. Next off, we have user Ricky420, who failed to recognize his GameStop gains and lost everything and then some. He rode the second GameStop squeeze in early March, which saw the stock increase in value by almost 500%. He loaded up on calls and his portfolio reached a $220,000 gain at its peak. This was a life-changing amount of money for himself and his family, so he consulted his mom about what is the best course of action. His mom told him to sell the position and lock in the profits immediately. Instead of taking her advice, he accused his mom of paper hands and doubled down on his position, buying even more calls. Unfortunately, his mom turned out to be right and GameStop soon started to pull back from the highs, and his options quickly tanked in value. By March 18th, he had lost all of his gains and then some, with a total cumulative P&L of negative $161,000. The comment section honors this Wallstreetbets user's loss porn by comparing him to the legendary Guh guy. In fact, the OP says that he received inspiration from Guh and is one of the main reasons he fell in love with WSB. We wish you luck on your future trades. Next off, we have user FabulousFlan, who is currently up 451%, or more than $10,000 on CYH call options. CYH, or Community Health Systems, is the largest provider of general hospital healthcare services in the US and has had a massive run-up, increasing 168% since the vaccines were approved last fall. Most of the gains we see on WallStreetBets are FDs on volatile meme stocks, but this user managed to make these impressive gains with a boomer healthcare stock that would be more suited for r/investing. FabulousFlan is familiar with community health systems because they operate hospitals around where he lives in Indiana. He noticed that during the pandemic, they've done a great job transitioning to telehealth, which is greatly beneficial in terms of efficiency and convenience. He thinks telehealth will be likely to stick even after the pandemic and provide long-term cost savings for the company. Additionally, they have sold off some of their underperforming hospitals to decrease overhead and raise capital by putting them in a strong financial position. Being bullish on the company's prospects, he bought 50 $10 strike calls expiring on April 1st. Recently, CYH has increased to $11.80, blowing past his strike price and putting his calls deep in the money. This resulted in more than $10,000 of gains. As far as his future plays, he is bullish on GE in light of their newly announced deal with AerCap, where they will be selling part of their aircraft leasing business for $30 billion. This deal will hopefully allow the conglomerate to pay down debt and streamline its focus around its other business units. He already owns calls on GE and plans to add on pullbacks. Congratulations on your trades. Next off, we have user NeonLights88, who had a pretty rough 2020 in the markets. He posted a screenshot of his account statement from TD Ameritrade showing a $1.3 million loss from options trading. This loss comes despite the stock market having a record rally, with the SPY rallying more than 70% from the March lows. If he had just owned an index fund or picked a few stocks, he would have benefited from this rally. But instead, he thought he could supercharge his returns by playing options on index futures, making short-term bets on the overall direction of the markets. While he had a few good trades, whenever the market moved against him, he would double down and lose even more money. His single biggest loss was a Condor options position on the S&P 500, which lost him $300,000. Having incurred such a large loss, some WallStreetBets users in the comments section assumed that the OP is a rich trust fund kid. Unfortunately, this is not the case. He works a regular 9-to-5 job making a 5-figure salary. His parents gave him a little bit of money, but now that he squandered it all, they hate him. Additionally, he funded most of his account by taking out $500,000 in consumer loans. He started off the year with good credit and convinced some lenders to loan him $500,000 in unsecured consumer loans, which he used to fund his options YOLOs. Now he is $500,000 in debt and probably faces the prospects of personal bankruptcy. But all is not lost. He recently received the $1,400 stimulus check, so if GameStop can reach $1 million, he has a chance of making back his losses. Let this be a warning to all of us: never take out personal loans for options YOLOs. Next off, we have user HeyZeus, who had perfect timing on a SPY call FD. He owned 574 call contracts of the SPY at $400 strike price expiring on March 19th. On March 18th at 2 p.m., the SPY peaked at $396, about 1% away from his strike. He sold at this very moment, bagging a 57% or almost $20,000 gain. What makes this trade so incredible is that right after he sold, the SPY tanked 2% and on March 19th, it closed at $389, which is below his strike price. Had he waited to sell just a few minutes later, his gains would have completely evaporated. The comment section is largely supportive of his gains and ability to sell at the top, while it seems that most WallStreetBets users do the opposite and sell at the bottom. User PlumpStegodon comments that the exchanges should introduce hourly options to allow for greater levels of speculation on intraday price swings. Congratulations on your gains. Alright guys, that wraps it up for this video. If you like this content, don't forget to like, subscribe, and share. Also, check out our second channel, WSM Research, where we publish DD on high-growth tech stocks. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.